Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Tuesday, June the 1st, 2010. Well, a change of trend today, and we have a downtrend in place with the candle today making a lower high and a lower low. The previous day's trading, we had the potential for a tweezers top pattern, and that's where basically we have an uptrend and then we have the highs in relatively the same position, a little bit of leeway with that. And that's led to a change of trend to the downside. It was also a borderline Harami pattern as well. Now, if we look at the body of this candle, it's a red body and it's fairly large, and that's telling us that the sellers have made a significant amount of net bearish gain on the day between the open and the close. And that's an increase on the amount of bearish gain that they made on the previous day. So that is something to worry about and tends to confirm the downtrend that the market's in at the moment in the first time frame. Now, this market has also closed down almost at the low, and that tells us that the bears have closed the market in control and they've shown some commitment to taking this market lower. So that may be fairly significant for the next few days trading. One thing to watch, however, is this very large zone of support all the way down to 1041. We can see previously on 1, 2, 3 previous occasions in this area from roughly about 1065, 1066 down to 1041, there was buying coming in every time the market tried to trade down to that region, and very solid buying, especially down towards this 1040 level. So we do need to watch that there is potential for that. Now, the market is trading below the cloud, however, so the market retains its overall bearish bias, and the market is trading down below the Tenkan Sen, which is the green line here, and the Kijun Sen, the pink line. The Kijun Sen represents the term in the medium time frame, so we have a downtrend or bearishness in that time frame, and the Tenkan Sen represents the trend in the fast term time frame, so bearish in that. So quite a bearish market in all time frames. Now, interestingly, the Kijun Sen is still pointing flat, and that's representing this congestion that the market's in now. There is a fair bit of volatility in this congestion area, but it extends from this 1041 level up to around this 1106 level. So a lot of congestion there, but the market is, a lot of volatility there, but the market is congesting over a very wide range. While that Kijun Sen is flat, there still is a good chance that the market will retrace back up to that level. So we do need to be aware that the market can take out this 1100 region. Whether it does it very successfully, I'm not so sure. The trend is down. I think it's more likely that we'll be testing an area within this area of support over the next day or two. That makes the low of the current candle fairly important for a potential continuation of the trend to the downside with a lower high and a lower low. But if the market does trade up, the high of the current candle becomes important, and this 1100 to this 1106 region of resistance becomes important for any potential retracement back up towards the Kijun Sen. Now, just also looking at the trend in the second time frame, the trend is down in the second time frame as well. So we have a series of lower peaks and lower troughs, and here we have a peak, a trough, a lower peak, and a lower trough as we took out this neckline of the head and shoulders pattern. We then made another, we made the lower trough here where it terminated down here, another lower peak, and another lower trough, and we have now just made a lower peak. Whether we take out this lower trough here again for a continuation of the trend in the to the downside in the second time frame remains to be seen. So we do need to consider, though, that the trend is the most important thing with technical analysis. So we are in a downtrend in the first time frame and in the second time frame, and all of our Ichimoku indicators are giving us a bullish indication. So the likelihood is that the market will test this region of support down below where the market's trading at the moment.